Now, obviously, Robinhood has been a big part of this retail trading boom, bringing a new cohort of investors to the market. But you don't exactly agree with its methods, what some call the gamification of trading, and its business model, payment for order flow.
Oh, boy. Great to be here, guys. Yeah, I mean, look, Robinhood's business model is as old as time, going back 100 years. And I'm always conflicted when it comes to Robinhood because they have onboarded tens of millions of people that wouldn't probably have been investing into the financial markets. The problem is, their stated mission is democratize finance. And that is a noble mission, but they do it through gambling and speculation, through gamification. It's kind of like we say, it's like McDonald's saying they're going to democratize food, right? You teach all the wrong lessons. If you're going to eat milkshakes and hamburgers and French fries every day, you're probably going to have high blood pressure and diabetes and learn all the wrong lessons. So if you view Robinhood and also any financial institution through this lens, okay, Robinhood in many ways is like a casino or a gaming company, then it's totally different. And in the financial world, you have to separate out. You want partners that are either fiduciaries, so by law, registered investment advisors, or where the incentives are aligned. And that's the problem with Robinhood. You go back to Charlie Munger, right? He says, show me the incentives, I'll show you the outcome. They are incentivized to have you trade as much as possible. And if you look at their revenue, they're essentially an options firm, right? They make all their money from options, then some stocks, and then in crypto. And the problem with payment for order flow, I actually am not hugely against it. I mean, there's lots of countries that have banned it. My problem is if you're going to have this altruistic message and say, hey, we're here for you guys. So people don't care if they sell it. People care that you don't share it. And that is a big difference.
Right. So, Meb, then what is the long-term value proposition for a platform like Robinhood? We've seen, revenues just soar and their transaction volume soar earlier this year. But do newer retail investors eventually go with a different platform that is, perhaps more transparent or doesn't use that payment for order flow business model?
They will. Robinhood could fix their problems in one day. 3 things they could do.
What is First, that then, though? Because other brokerages use PFO apps.
It's easy. And the brokerages all make money in like 4 different ways. It's just they describe it differently, right? It's payment for order flow, short renting, interest, which is like where Schwab makes it. Robinhood could do 3 things. First, start being honest. They're often dishonest in the media. They talk to their customers. They recently came on TV. Multiple execs said all their investors are buy and hold investors. I'm sorry, but that is an absolute bold-faced lie, right? They do 80 times the trading that Schwab customers do. Second, so just be honest. Second would be you can share in the short lending and payment for order flow. Most investment companies like ourselves who manage public funds, we do short lending. The difference is we return all of it to our shareholders. One of our lowest cost funds has a 0.34% management fee.
Okay.
We return 21 basis points of short lending, right? So they could share in that, but they choose not to. And lastly, obviously, they need way more customer support. There was something like 10,000 complaints they didn't even report.